Hey there, Jack Bosch, and welcome to the #1 source for real estate and financial information. I'm on a mission to create 1,000 millionaires over the next 2 years, and right now we're going to talk about multifamily real estate investing as one way to reach that $1 million status. We're going to look at exactly how to value multifamily, what are the factors that determine on whether something is a good deal or not a good deal, and we're going to go into the nitty-gritty. So stay tuned. We're going to start right now. All right, so what is multifamily? Well, multifamily really means apartment buildings. Now, think about it this way. Apartment buildings is anything you see that typically has more than 4 units. Like in real estate, single family is typically considered anywhere between 1 and 4 units. So duplex, triplex, fourplex, while technically considered multifamily, is not really what we're talking about. It's also from a lending point of view. A residential lender typically can lend on a duplex, a triplex, or fourplex, but they do not lend on anything above that. So there's a clear separation between up to 4 units and more than 4 units. And what we're going to talk about is more like the larger kind of apartment complexes. Perhaps you live in one, perhaps you drive by one, perhaps you used to live in one at some point of time. And actually, as a nation, as a country, we're moving towards becoming what's called a renter's nation. So the long-term trajectory of housing is it's going to become more and more and more expensive. Now that's the sad news, but that's just how it is. The key thing is there's a few distinctions between single family and multifamily. In single family, let's say you have a house and you figure out how to rent this house for 4 times more than anyone in the neighborhood rents their house. Well, if you do that, you have a cash cow of a house on your hands. Wonderful, but if you sell that house is not a dime more worth than anything else in the neighborhood. If the neighboring house is sold for $350,000 or for $500,000, then your house, when you sell it, is worth $350,000 or $500,000. The value of a single family home is determined by the value of similar houses in the neighborhood within the last 90 to 180 days. Very simple. Now let's look at the apartment complexes, multifamily. It's completely different. The value of a multifamily, of an apartment complex, is single-handedly determined by the income that property throws off. That's it. So therefore, let's say if you have a multifamily property that spits out $100,000 in income per year before you pay your mortgage, then let's say if that property sells at a 20 times multiple, or that the equivalent of that is what's called a 5 cap rate, we'll explain cap rate probably later on or in a different video, then this property is worth $2 million, because $100,000 is 5% of $2 million. So in other words, you can sell this property for $2 million. If you figure out how to increase the income of a property, then you massively increase the value of that property. So for every dollar that you add in income, the value goes up by, on the low side, 20, and by a more realistic side, if it's in a primary market like the big cities in the US, even by $30 in value. So what that means is like the following. So you bring that income of that property from $100,000 all the way to $200,000, and we'll talk about ways that you can do that in just a second. Then you literally take the value of that property from $3 million to $6 million. You double the value of the property. How crazy is that? That's why there's so much demand from investors for multifamily, because single family is great. You operate with cash flow, you get some cash flow from single families, you get some appreciation, but you're not in charge of the appreciation. Appreciation is just the luck of the draw. If the economy goes up, if the prices go up, it goes up. If it goes down, it goes down. So you really only partially have that. That's not up to you. You also get depreciation, so you can write it off because it's an investment property, but you do not participate in actively being able to drive up the value of the property. So that is a lever, that is a massive lever that multifamily has that single family doesn't. So let's look at whether a property is a good deal. So when analyzing a property, what you typically ask for from a seller, and they actually disclose it to you, they give it to you, is a copy of the rent roll and a copy of what's called the T12. Now T12 stands for trailing 12-month profit and loss statement of the property. So you get basically financials, right? So if you don't know how to read that, well, don't worry. I'm gonna show it to you. Subscribe to my channel. There's gonna be lots of videos on all these kind of things. But the simple way is that a profit and loss statement shows you on top the income of the property and the different kind of things where money comes in from. And then below it shows you all of the expenses of the property. And then at the bottom it shows you what's called the net operating income. So what you wanna do is look at that, and with that determine whether or not this property still has upside. Now, the other thing is you look at the rent rolls, and the rent rolls tell you what people are paying for rent. Now, once you have that baseline information, the next thing you need to do is you need to check into the market and see what's normal in the market. What do comparable properties in the area rent for? So you see a property a mile down the road that is similar in age, similar in amenities, similar in kind of like finishes, and you call them up and they tell you that the rents over there are $1,100 for one bedroom and $1,500 for a two bedroom, and then you call another couple of 2-3 properties and they kind of confirm that same price range, then you know that the market right now is at $1,100 for one bedroom and $1,500 for a two bedroom. And now what you do is you go back, and if you see that what they charge on the property that you're being offered is $800 for one bedroom and it's $1,000 for the two bedroom, you know that you have some massive value add opportunity in raising the rents. Typically though, you can't just willy-nilly raise the rents. You actually need to probably invest some money into that property. So you need to look at the condition too. You need to see like, well, why are they only charging $800 and $1,100 here? It's because probably this is a property that's outdated. You realize now that you can raise rents by $300 for the one bedrooms and by $400 for the four bedrooms. So that's an average of $350. That is incredible. Now for that, you might have to spend $10,000 a unit in upgrade. So you might have to put another $1 million in the property. Again, where do you get the money from? From investors. You don't use your own money. But when you do that, if it sells at a 3 cap, which is basically a 3.3 cap, which basically if it sells at a 30 multiple, you now raise the value of that property by $9 million. $9 million. Anyone having brain melt right now? Now, even if it only sells at a 20 multiple, which is the equivalent of a 5 cap, you still raise the value by $6 million. Even if you structure the deal such that you only get 30% of the upside, you get a third of $6 million, which is you just made almost $2 million. And if it's $9 million, you almost made $3 million. That's the power of multifamily investing. Another thing you can look at is, let's go to the P&L again, to the profit and loss statement. How are they managing the property right now? Many times, people are running their properties very inefficiently. You should be able to run a property in a normal market at a below 50% expense ratio. The third kind of thing that I want to quickly cover is obviously the area that you're in. So you want to be looking at the properties and the areas that it's located in, and you want to make sure that that's at the very least a stable area, but definitely not a deteriorating area. Because if it's deteriorating, you're fighting the currents. You're going to have worse and worse and worse tenant profile coming into that part of town, yet at the same time you're looking to raise rents, and that's just not a combination that works very well. All right, so if you guys enjoyed this and if you got some value out of that, please make sure you put your questions into the comments. Make sure, of course, you follow me, you subscribe to our channel. We just scratched the surface of multifamily. There's a lot more to come. Please let me know in the comments what you want to know about, so we can create lots and lots of videos about this, about land flipping, about saving taxes, about anything you're really interested in the real estate and financial space. All right, with that said, thank you very much. You guys have a wonderful rest of the day. Bye-bye.